we don't know for sure what they're going to do behind the scenes, but we do know this is BlackRock, and they live in a Wall Street world that lives off of rehypothecation, and they run a system where they can basically know that if they make a mistake, they're going to be bailed out by printed money.
Crypto family, welcome back to the channel. Aaron here coming back at you with another cryptocurrency video today. If you're new to the channel, please consider subscribing. And in today's video, we'll be checking out a recent interview between Lawrence Lepard, Greg Foss, and Elliot Johnson. These are three key figures in the Bitcoin and crypto space, and they're talking about the Bitcoin spot ETF with BlackRock. As you guys just saw in that clip, Lawrence was talking about potential rehypothecation and the potential of Bitcoin's price being manipulated because of that. And then also Elliot Johnson is giving his thoughts on this. He's actually involved with the Canadian spot Bitcoin ETF. And then Greg Foss giving his opinion as well. This is a good one here in today's video. Watch all the way to the end, a lot of information. Let me know what you guys think about this in the comment section below. What do you think about this BlackRock spot ETF? What is this going to do for the Bitcoin price going forward? But let's go ahead and jump into today's clip.
And of course, we all know the beauty of Bitcoin is it doesn't allow that. And so they may be stupid enough, and I believe they are stupid enough to potentially create paper Bitcoin with this product. The rehypothecation is a very high probability behind the scenes. And I actually dug into the prospectus and I tweeted it out. And they even had some language in there talking about the adjustment price, which was, they said the thing will not always track perfectly. The price of the ETF won't always track perfectly with the price of Bitcoin, and there will be an adjustment price as we make sure we match the size of the fund to the size of the Bitcoin we hold. And I thought, okay, that's it right there. There's the window. So they could sell paper Bitcoin is the way I read it. And they're likely to do so, based on how they've behaved in the past. Having said that, I think that they're coming into the space and announcing. I mean, this is a $10 trillion, one of the largest, if not the largest, asset managers in the country. Just removed an enormous amount of career risk for any financial advisor who couldn't put people into Bitcoin because it was scary and nobody big was endorsing it. And so now we've got Fidelity, these guys, a bunch of other people applying. I mean, this is going to be enormously positive for Bitcoin demand in your average person's portfolio, and that's a very good thing. But the risk of rehypothecation, I think it's very real.
So I have a bit of a different take, and it's all in the art of dissecting the language. First of all, if I'm not mistaken, and my friend Elliot is the expert here, there's usually force majeure language in any ETF, like the BlackRock ETF, that allows for adjustments in the event of market dislocation or the like. My very simple layman's understanding of this is BlackRock will have a number of ETF shares outstanding, of which all of them are borrowable. Most of them, because the institutions that own those ETFs are going to allow them to be borrowed, which means you can borrow them to short them if you want to take a position on Bitcoin. That's fine. Shorting is a necessary component of any efficient market as far as I'm concerned. But my point was only that the maximum amount of Bitcoin that could be essentially recreated is the number of the market value of Bitcoin that's in the BlackRock ETF. If they're going to do nefarious activities, which include using derivatives or paper Bitcoin exposure from an exchange that doesn't actually deliver the Bitcoin, I believe that will risk BlackRock's entire reputation across their entire ETF business model, such that if I was making that decision as CEO of a ETF company, I wouldn't even think twice about it. I would not risk my entire reputation of proper pricing and closing prices on an ETF that is supposed to mimic some sort of benchmark or some sort of asset. I would not do it. Now, Larry and I have differing views as to the potential for them to do it. Of course, there's the potential. I do not argue with the potential. What I believe is in the ethics of Wall Street. Now, that in itself might be one of my sillier comments, but Remember, this is a $10 trillion asset manager that's going to risk the entire business for how much is the Bitcoin ETF going to be by BlackRock? I said 50 billion. You're going to risk a $10 trillion business. Let's get this straight. A $10 trillion asset management business for a $50 billion ETF that could grow much bigger than that. But I think that is the combined inflows into the Bitcoin ETF. Why did I say that before, Nico? Because in Canada, it was 5 billion. The rule of 10, take what happened in Canada, multiply it by 10. That's what you get in the United States. That tends to work well with GDP, with things like mimicking financial risk exposures in different markets. So without talking too much more, Larry and I always agree on just about everything. It's just our degrees of probability that something happens. He might put a higher probability that they're going to do it. I would say force majeure is always an input into these Bitcoin or any ETF whatsoever, and Elliot will expand on that. And secondly, and most importantly, I don't risk the entire company business, which is built on ETFs, because I'm going to put paper Bitcoin in a minuscule ETF relative to the rest of my business. Just my 2 cents.
The concern that BlackRock has, mathematically, you can just look at this. If you assume their $54 billion is the expected AUM of Bitcoin ETFs in the US within a month or so of launch, by comparing it to Canada and taking the same market share, that's about 40% of the current liquid supply of Bitcoin, based on the amount that's moved more recently than the past 12 months. So they're not going to be able to put $54 billion of Bitcoin into the fund at 30,000 bucks a coin. It's not going to happen. Like, the liquidity will occur, but liquidity will occur at a higher price. And so their concern is big inflow days, right? What happens on day one if they need 10 million bucks at their reference rate? There isn't 10 million bucks available probably at that reference rate at that day. And so their concern is the early friction if they launch, and it's just the biggest ETF launch ever. And I'm not surprised council would put language like that into their perspective. I think BlackRock is going to do a lot for mind space in terms of adoption. I think, as Greg has mentioned many times, having that QSIP, having that vehicle that is custody within the traditional financial industry opens the door to a ton of institutions. You know, I've said before many times that the other thing about it is BlackRock signaling to the rest of the financial industry that it's okay. It means it opens it to institutions who either use their product or hold their own Bitcoin on their balance sheet or hold their own Bitcoin in custody for themselves. This is the starting point for so many people. And as crazy as it sounds, regulatory clarity is a thing for big institutions. I mean, for people who are, you know, more on the libertarian side of digital finance, you look at it and you say, well, how come more rules increase freedom? Isn't that the opposite? And yes, I think there's an argument for that on an individual basis. But if you're a pension plan or you're a corporation or what have you, you need to make sure what you're doing fits within the rules of the system that you're in, the system that you've been in your entire career. And BlackRock's ETF is going to do that. And yes, I think it's obviously going to have an impact on demand because it's going to bring a whole bunch of new people into the ecosystem. But it's also going to make it way less weird for people if they know that their pension plan has some Bitcoin in it, and maybe they have a bit of a Bitcoin ETF position with their investments with their advisor. If they then come across the opportunity to self-custody a bit of Bitcoin so that they can take some with them on vacation and use Lightning to pay for things when they're overseas without having to change currency to something else. This is how adoption happens. It doesn't happen with people saying, I relinquish everything I've ever known and now I adopt the new thing all of a sudden. It happens when you can get to the point where Bitcoin is not an exotic thing for you. It's something normal. You feel like you know about it. That opens the door for you then to do a bit more in terms of using it. You have friends who have it. They do the same thing. This is all positive stuff. It really is. And so I think the main thing that I would just like to leave everybody with in terms of my opinion on this is that this is not a situation where there are two forces in opposition to each other. I don't think that's the right frame to think about it. I don't think it's the existing Bitcoin community and now BlackRock and the giants of Wall Street and we're going to be in conflict. I really believe that that's not true. I think you can believe that that's not true and still believe there are bad actors in TradFi, and there may be bad actors within regulators and others and so on. But I really think this is actually about people coming together. I really do think that the BlackRock is not going to want to be short any Bitcoin compared to what they say they have, because they're not going to want to have to chase that price if they need to go and meet a redemption by trying to buy it somewhere in the open market. There's a reason that Grayscale has so much actual Bitcoin in their fund. The scarce asset here that everybody wants is the Bitcoin itself. Like you don't want other things. You want the actual Bitcoin. I think everybody understands that right now, and I think that's why you see BlackRock interested in getting into the space. They don't want to be left behind. They don't want to launch an ETF when Bitcoin's at $300,000.
And thank you guys for watching all the way to the end of today's video. If you found any value, make sure to hit that like button. Like I said earlier, leave your thoughts in the comment section below. Love to hear from you guys. My name is Aaron from the Bitcoin Bros. I'm out.